Going on YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 5 dividend stocks for you to check out, and these are dividend stocks to buy for March. They have solid dividend growth. They're a good bang for your buck. I own all 5 of them, and I'm going to tell you, dividend growth always wins. Yes, I dropped the Yield Max ETFs. I actually had a pretty good day today. I made like $700+, but that's going into the dividend growth stocks. That's the focus because I always have told you dividend growth always wins. And really good companies that are a good bang for your buck, like these 5 that I have for you, they're a deal. And they've been down, a little bit of struggle in the market and the price per share, but they're really solid companies. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 5 dividend growth stocks that I actually own as well right now. The first one I'm going to go over is Nike, sitting at 79.43. Look at that drop since the pandemic, and look at the jump since they were beating the S&P 500 in 2022, and now they're down. So they're a deal right now, 79.43. In the past 5 years, they're down 11.13%. That's a deal right now. I own shares of them. If somebody gave me $10,000 right now, and they told me, actually, any of these 5, Nike would be one of my first thoughts in my mind. They gave me $10,000 and I can do only one dividend stock. Nike is right up there. That logo is everywhere. It's international. It's a powerful company. Big Ten, college football, NBA, okay, everything. They're everywhere. Actually, I'm wearing Nike socks right now. So, I mean, just everything they have. Previous close was 80.02. The day range was 78.18 to 80.02. The year range 68.62. Man, I wish I got in at $10,000 at that. The 105.57. The market cap is 117.49 billion US dollars. Let's go over some trends real quick. So a few things. The revenue, okay, earnings per share, November 2024 with their earnings call, it won by 24.71%. Also, the revenue beat by 2.04%. So look at this. The revenue at 12.35 billion. That's quarterly. Yes, it was down a little bit, 7.72%. That's fine. Net income, sure, it's down a little bit. Earnings per share, net profit margin, it's down a little bit. That's fine. I'm really not too concerned. And I'll show you their dividend history. Looking at their dividend history, 2016, 16 cents, 2017, 18 cents, 2018, 20 cents, 2019, 22 cents, 2020, 25 cents, 2021, 28 cents to 31 cents, and then in 2023, 34 cents, 37 cents, 2024, and 2025, 40 cents. Their payout ratio is not too bad, 43%. The number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 10.49%. That 2.01% with the dividend yield, if you bought one share, you made $1.60. So it's a good bang for your buck, a little bit cheaper right now. So these are ones that I'm capitalizing on. Let's jump to the next dividend stock. The next one I'm going after is Starbucks, sitting at 115.81. So in the S&P 500, it was beating it at one point. Now it's back down. Now it's starting to creep back up a little bit. They got a new CEO who's very aggressive, very sharp. It's time to capitalize. 115.81. Okay. Previous close 114.49. Day range is 112.80 to 116.09. Year range is 71.55 to 116.09. Market cap is 131.55 billion US dollars. Average volume is 10.61 million. The PE ratio is 37.43. Dividend yield is 2.11%. Let's go over some recent trends. So there's some recent news. There's some layoffs. The CEO is reassuring that they're starting to rebound. He's a very sharp guy. Came from, I'm pretty sure, Chipotle. Now, look at the quarterly. Just the revenue is 9.40 billion. It was a little bit down, 0.29%. Operating income was up 5.35%. Net profit margin was a little bit down, and earnings per share was a little bit down, and the EBITDA was down. Okay, if you're looking at these numbers, but it's such a great opportunity for me to jump in. So I have been buying Starbucks, and the dividend growth is very solid. So start in 2020 it was 41 cents to 45 cents, and then in 2022 49 cents to 53 cents, and then to 57 cents, and then 2024 61 cents, and then you see in 2025 61 cents. So yes, their payout ratio is a little high. Well, you just made some layoffs. That's, they're making some changes. This guy's coming in, he's busting out the whooping stick, and I feel very confident with him making the move. They paid him big money to turn things around. Another thing, I don't want to get a little political, but this DEI stuff, people have had enough of DEI. I can tell you many organizations are getting sick of that. They're getting rid of it. They realized it wasn't good for the company. It wasn't attractive for the company. You had people protesting and refusing their products because they were DEI. So anytime a company gets political, I don't care if it's right or left, it just causes problems. Just stay neutral. Say, hey, we are here for the United States. Because you know what they said? We don't like, or, we support Israel. And then internationally, people got picked off. Just keep your mouth shut when it comes to politics. You say, hey, we're America, we support, America or something. But when you get involved with DEI stuff that in political stuff, that's a problem. The dividend growth in 5 years is 8.46%. So if you bought one share, you made 244 with a 2.11% dividend yield. That is not bad at all. 8.46 in the past 5 years, and they're going to make some changes. Hopefully the dividend growth gets better. Let's jump to the next dividend stock. Next is Bank of America. This is another one that's a good bang for your buck. BAC is a symbol, sitting at 46.10. Look at it. It's not doing well against the S&P 500. That is very attractive for me. It's less than $50. It's a very good company. It's well known. Previous close is 44.12. Its day range is 44.20 to 46.20. Year range is 34.03 to 48.08. Market cap is 350.86 billion US dollars. The average volume is 35.16 million. The PE ratio is 14.35. Dividend yield is 2.26%. So that's not a bad one. Let's go to the recent news and earnings. So looking at its recent earnings report, okay, that was very solid. Revenue was up 6.41%. That was at 23.90 billion, okay? Operating expense was up 7.40%, 16.79 billion. Net income was at 6.67 billion. That was up 111.99%. Net profit margin was 27.85. This is Google Finance telling us this. It was up 134.29%. That is phenomenal. According to Google Finance, that looks pretty solid. Okay. Now, what's even more solid is the dividend growth. We're going to look at that. So we're going to jump to 2018. It was 15 cents. 2019, 18 cents. It was a little stagnant in 2020, 2021. You can blame the pandemic. And then in 2022 is 21 cents, 22 cents. Then 2023, 24 cents. 2024, 26 cents. So a low payout ratio, very nice. Number of dividend increases in the last 5 years is 4. Dividend growth in 5 years, 8.72%. You bought one share, you made 104 with a 2.26% dividend yield. I like financial sector stocks. They were hit hard. I put heavy money into them. them and REITs, they've been down. And I'll show you another REIT that I've been buying and I absolutely love because it's down. That one is Prologis, sitting at 123.92. Average volume 3.65 million. The market cap is 114.77 billion US dollars. Your range is 182 to 135.76, so it's starting to catch up. It was beating the S&P 500, one of the biggest industrial REITs in the world. I mean, that's huge. Day range is 121.91 to 124.25. Previous close is 122.77. Look at this, good bang for your buck. It's going to start catching up eventually. I mean, it was killing the S&P 500. REITs are hit hard. Things start getting better. REITs are going to come back with a vengeance. And I'm not going to go over FFO with Prologis because Prologis is way more important. Funds for operation is way more important. It's a good metric. FFO, AFFO. I'm not going to go over that. I've done it numerous times in numerous videos. But its revenue was up 15.97%, and it was at $2.29 billion. Now, the thing about REITs, 90% plus of what they make have to go back to investors. I myself, it is hard to do real estate. I don't know where I'm going to move or if I'm going to stay in the area once I land a nurse practitioner job. Been getting interviews like crazy. And, I'm looking at buying a house eventually or settling down with somebody. I really can't do real estate. So I invest in REITs. I have them do the work for me, these companies. And again, 90% of what they make have to go back to shareholders. That's the rule of a real estate investment trust or real estate investment trust, aka REITs. So that's one thing that's very crucial is revenue. Revenue's going up. That's good for REITs. And we're going to jump to the dividend history. So here's the thing. Look at this quarterly dividend growth. 2016, 42 cents, 2017, 44 cents, 2018, 48 cents, 2019, 53 cents, 2020, 58 cents, 2021, 63 cents, 2022, 79 cents, 2023, 87 cents, 2024, 96 cents, 2025, 101. They're normally going to get a little bit of a high payout ratio. Remember, 90% of what they make go back to investors. Their dividend increases in the last 5 years is 6. Dividend growth in 5 years is 13.66%. So if you bought one share, you made $3.84 with a 3.10% dividend yield. That is very attractive. This is why I buy it. This is why I'm loading up on it. Dividend growth always wins. Look at those numbers going up. Look at the yield max numbers. They're going down. Yes, I got 600 plus worth of NVDY yesterday, but hey, that's what I'm using that income to buy that. This is way more reliable than the yield max ETFs. And I've been saying that. Reliability is very important for retirement. You don't want a scatterbomb income. You want consistent income with raises. Now, let's jump to the final dividend stock. And they're starting to make a comeback. That's Wells Fargo. WFC is a symbol. It's sitting at 78.32. I didn't like them for a while, but hey, they can pay me in dividends. Their previous close was 76.62. Its day range was 76.59 to 78.42. Its year range is 50.15 to 81.50. Its market cap is 257.59 billion US dollars. Average volume is 15.50 million. The PE ratio 14.60, and according to Google Finance, the dividend yield is 2.04%. Now, let's look at the recent earnings report. And it actually looks pretty good, a recent one. Revenue was 19.28 billion. That was up 0.45%. Operating expense was 13.64 billion. That was down 0.49%. Net income is 5.08 billion. That was up 47.39%. Net profit margin 26.34. That was up 46.74%. Earnings per share 1.48. That was up 14.85%. Let's jump to the dividend history. I'm going to start in 2018 as 43 cents to 45 cents in 2019. Then it was at 51. And you see the pandemic. Ooh, it was at 10 cents. And then it was 20 cents in 2021. And then in 2022, it was 25 cents. Then in 2023, it was 30 cents. And then 2024 is 35 cents. And then 2025, it's 40 cents. So recently, its dividend growth in 5 years, 18.69%, a low payout ratio at 29%. Number of dividend increases in the last 5 years is 5. You bought one share, you made 160 with a 2.04% dividend yield. So I'm going to summarize all of this right now and then jump to my disclaimer. So I own all 5 of these dividend growth stocks. I plan on being long in them. They have given me very good dividend hikes. They have been very consistent. Now, like I said before, the yield max ETFs, the consistency was not there. Yes, I loved the income buying my dividend growth stocks. The writing was on the wall. I got rid of them. These are way more safer, way more stable, more things I can rely on if I wanted to create my own retirement pension. And that's what I'm doing with my dividend portfolio, is creating a source of passive income. I'm a shareholder. If I'm a shareholder, I want to put money in a stock that gives me money back in returns in dividends. The majority of my stocks are back dividend stocks, okay? Now I have a dividend portfolio, I have a growth portfolio like an IRA, and I want to have very powerful dividend growth stocks. My income for those high yield dividend stocks are going to be buying the dividend growth stocks. That's what I'm going to be doing for maybe 20 years. Okay. Maybe 10 years. Maybe who knows if I can have a good enough bang for my buck, good enough portfolio, but I'm getting there. And actually, my income has done significantly better every year. You're seeing the growth, you're seeing the high yield stuff. The curve yield's going to be buying these dividend growth stocks. I'm really pumped up about that. I'm getting some nice firepower. Okay. And I'm going to show you some of these other ETFs that I'm going to be buying that I can maybe rely on, but they're going to be buying these dividend growth stocks. They're consistent. This is what I want in the long run, are raises. Consistent companies, well-established companies that have solid dividend growth. Yes, it's nice to make money from these high yield dividend stocks. I love them. I love CSWC. I love Ares Capital Corporation. I love Saratoga Investment Corp. Yes, I love Arbor Realty Trust. Their dividend growth is not that fast or effective as compared to these 5 dividend growth stocks. So I want to point that out, that I am a hybrid investor. I'm a high yield dividend investor, and I have a high yield dividend investing strategy. I have a dividend growth investing strategy. I have a value investing strategy, if you can see with what I've been buying these past few years. And I love income investing. I love that hybrid. I'm a combination of everything. And growth investing, that's my IRA. I'll deal with that, and then I'll have a 401k and all that. I mean, you saw how many shares I have of SCHG, and why I said it's better than SCHD in a IRA. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And I'm going to jump to my disclaimer. As a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, can lose money. So be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. You don't have to buy things because I buy things. I'm just being very straightforward. I'm showing you my passive income journey. You have to be aware, okay, that any investment you make, you are at a risk of losing money. So you have to do your due diligence. Go, and that's why I'm telling you to go see a financial advisor. I don't provide any financial advice. Any of my posts on social media or anything regarding that, I don't provide financial advice and I'm not certified to do it. So don't even ask me for that. Go to a financial advisor. Take care and have a great March.